Welcome to the Daily Update, where I'll go over the action in the market for Thursday, February 8th, and then we'll see how things look for Friday, February 9th. Boy, talk about a yawner. Please wake me when it's over. The market just didn't do very much, at least when we look at price action. Now, there's always things that happen under the surface that we can look at. We can see some improvements. We still have some concerns. We have some things that are showing strength. We're also seeing some negative divergences. So even when we have a really slow day below average with volume, it still pays to go in and look at things. I know it's not as exciting, but we're trying to just watch this story as it unfolds day after day so that when things really start to go in a direction that we anticipate, we can jump on and take advantage of that. Let's go back and talk about what happened. We had a flat open, and then we just kind of stayed flat for the rest of the day. We remained near the unchanged level, and then we dropped down to the daily pivot. Ooh, that was a really big move to 49.88. Then as the day went on, we chopped sideways, and we pretty much stayed near the unchanged level for the rest of the day. Prices briefly went above 5,000. It's the close that's the most important. I know everyone likes to say, well, we went above 5,000 there for a while. No, it's the closing value. That's what's really going to count the most. We ended up closing just slightly below 5,000, and we were up 0.06%, virtually unchanged. But as I usually say, it goes in the books as a positive day. We were below average with volume. We are positive. We're kind of focusing more now on this overbought condition. We have a pretty long list in the short and intermediate term. We're still looking overbought in the long term again after we had been working some of that off. And that's not necessarily a negative thing. It just means these are points when the market usually tops out at some point and either goes sideways, declines slightly, or in more extreme cases, it actually reverses course and goes in the opposite direction. And as I've been saying lately too, we have a whole list of geopolitical events that are going on right now, but that just doesn't seem to matter to the markets right now. Some comments that we can make. We're just under 5,000 for the S&P. The NASDAQ 100, the S&P did set new all-time highs. Even though it was barely an up day, it was enough to create another new all-time high. Small caps had a good day. This is encouraging, and we're seeing small cap growth. We're still seeing growth looking better overall. So this is some potential strength that we are seeing under the surface. Here's our short-term list. The same as it has been. There's really been no change since yesterday's video. The Williams percent are the CCI 14 and 20, the stochastics, the standard deviation, the boom indicator based on 20 periods, and the RSI based on 9 periods. Our intermediate term list, also, we had one new addition. We're looking at the Chaikin oscillator being added to this list. We're still watching our oscillators as they're giving us some mixed signals. We have the Sean trend meter, the bullish percent index for the NASDAQ 100, the money flow index, the boom indicator, the RSI based on 14 periods. That's more of our intermediate term RSI indicator. And then the new high, new low study based on 10 periods, which has pretty much been pegged near the top for all of 2024. And you can even go back into December. On a long-term basis, we're still looking at the 150 and 200 simple moving averages being extreme. The scenario has not changed, that it's looking more like the Fed is at least going to keep rates the same and possibly even cut rates. And the market's now still going back and forth on when that will be. March came into the picture. That was taken away. The next time that they have a meeting could be May. So now that'll be the focal point going forward until that either becomes more likely or less likely, and then we'll jump to the next meeting after that to try to see what's happening there. The dollar was up and interest rates were also up. This could have pressured stocks, but at the same time, yeah, it was a boring day and we chopped sideways, but we're not seeing an awful lot of selling. Of course, that could change at any time, but we had a couple of just pretty much comatose days this week where selling could have come in. People could have locked in some profits, but they didn't. And so that can be taken as positive itself. The 10-year ended up closing at 4.17%. we're getting up there again with the 10-year yield and with all of the different yields now. At some point, if this keeps going, the stock market is going to have to reckon with that. They're not going to like that. And we still have our yield curves that remain inverted. Sentiment is getting extreme. We had been at 75 where we were extreme before. We actually ticked up 2 notches to 77. This is the point when we say, okay, we're now getting extreme positive again. We have to look at the possibility of using this as a contrarian indicator, whether that's going to produce just some kind of a pullback, whether we're going to go sideways as sentiment comes down, or if we're going to end up seeing an actual reversal. We don't know that yet. We're still trying to see what's the market going to do with this 5,000 level. Our trend is positive. The ADX is just barely above its moving average, both in the short term and intermediate term. I'm keeping our bias at positive because we had another slight update and our momentum is positive as well. We did get some economic reports, but this has been a pretty light week overall. Weekly jobless claims actually shot up. They came in as expected, but they went up. The moving average is still coming down, and I'll show you that chart. We were at 218,000 as expected. Last week, they were at 227,000. I should say never mind. We'll get to that part. Continuing claims came in at 1.871 million, a little bit lower than the 1.894 million we saw last week. Wholesale inventories, I don't have a chart for this one. They came in as expected, up 0.4%. Last time they were down 0.4%. Here's the chart where we came down with the jobless claims, but the moving average continues to go up. I might have reversed that earlier. We're keeping an eye mostly on the blue line. That's what we want to see because that's more of the trend, and it tries to take out outliers here as reports are released. And we're also continuing to go up with the moving average with the continuing claims, even though they did decline. Here's our chart showing everything together. It's a little hard to see. I wish I could make this a little bit bigger, but we've got this huge spike, and I like to give some historical context here. The red line are the initial claims, and then the blue line are the continuing claims, and then the unemployment report or unemployment rate, it stayed the same at 3.7. So we just kind of put these all together to get some perspective there. I don't have any Isabel Net blog charts to show you. I went through all their list, and it's like, okay, I don't really see anything that's really telling us anything we're not already observing. Here's our intraday chart where we had a flat open and we just stayed right about at the unchanged level. We did come down to the daily pivot. That was the low. We got above the unchanged level, came back down, got above, and then we closed just slightly positive on the day. Looking pretty comatose also intraday. We were flat with the initial overnight session. We did see a little bit of a dip down, and then we came right back up to the unchanged level. And this is where we opened the session, and we're pretty much unchanged now going into Friday's session. We're still looking good here with the blue line above the red line. That means that growth on an intraday basis is doing better than value. And when we look at our ratio, it did end up closing positive. Not an awful lot of strength here, but we try to look at the bigger picture. We're back on the 31st. We started to come back up, and we're seeing an overall upward trend where growth is outperforming value. Here's our end of day charts where growth was up, value was unchanged. In the mid caps, we saw growth up more than value, and we also saw that for the small caps. So this is more encouraging. This is an end of day chart. We've been seeing a nice little push up when we compare small cap growth to small cap value. We're not seeing that in the index, at least yet, but this is showing some under the surface improvement. Also seeing some improvement with the small caps. Not really seeing a breakout of any kind here with the index, but we have been in a longer term uptrend, and now we're starting to build upon that. Here's the S&P growth to value ratio, also continuing to go up. We haven't surpassed this previous high yet. We're still in a longer term downtrend, but the longer we stay above both of these lines, the more this might come back and actually generate a golden cross. Also continuing to show some improvement with this other growth to value measurement that we use. We're above all the lines in the rainbow, but we still haven't come back to this previous high, at least yet. Discretionary showing some improvement, but not really breaking out yet when we look at the ratio. Keeping an eye on our trend, we're just barely above the moving average right now. So we are in a strengthening trend, and we're above 20, and the green line is on top. So we are positive. We're a little bit more pronounced here in the short term, above the moving average, green line on top, above 20, so we are positive there. We came down a bit with volume, but over the last number of sessions, we have been above volume or above average with volume. Sentiment, not really seeing a real big change with the Ulcer Index. We came down with the VIX on the line chart. We're dropping below the moving averages. We're also a little bit lower here with the bar chart. And even you can see the little tiny dot down here. That's the intraday range for the VIX, and it barely moved as well. We are seeing a little bit here where the VIX of the VIX is picking up a little bit of steam. Could that be ahead of the weekend? It's the Super Bowl weekend, it's the biggest sporting event of the year. There's still these geopolitical things that are in the background. You never know what could come into play. You might have some increase in volatility ahead of the weekend, especially if we end up having a down session on Friday. We are falling off, though, with the other way we look at hedging, with the equity put call ratio continuing to decline. So with our 5-period, it's really hard to see here. You need a magnifying glass, but we are just barely turning down. So this is looking a little more positive. We're coming down with our VIX to S&P 500 correlation. We spiked up here above this line, this dashed line, and now we're coming down. We don't really know. The market isn't really reacting to that yet because on the next chart, we're still up in the red area. We are coming down a bit, but this is kind of that area where the market is expecting something big. So when we go to the previous chart, this typically is negative when we spike and then come down. And I tried to draw some lines to show when these spikes happen and then what the market did after that, where this one is more neutral. It could be up, it could be down, it could be not much of anything. We did get the latest reading from the American Association of Individual Investors, and it wasn't all that changed. We are seeing the red line of the moving average continuing to be more positive, and they're not necessarily really extreme at this point. Our advanced decline line studies, we are finally coming back out to this previous highs based on price. We're still lagging a little bit here based on volume. We were pretty much flat there. And we are seeing more new highs than new lows, but we have been dropping off overall. That's why our 5-period is declining, but our 10-period continues to turn up ever so slightly. We're positive with the advanced decline ratio since we're above 0. This is also encouraging. Accumulation distribution is well above an advancing moving average. We're also showing some improvement with the Chaikin money flow. But we're starting to get into that initial extreme positive area when we look at the Chaikin oscillator. The NYSE advanced decline line did show some improvement as the S&P has been going up. So that's suggesting the S&P has been going up, which is positive, and we're seeing a bit of an improvement with the broader market measure that we use. So looking at our advanced decline line studies, we were up with the common stocks on the NYSE, coming back up to previous levels with the S&P, showed a bit of an improvement with the mid caps. We came back up with the small caps, but we're still under the moving average. Our daily chart, this is still looking pretty healthy overall. When you kind of look at all of these latest bars here together, we're above this pivot point right now. If we do go up from here, 5,000 is really the big thing, but it's not coming up here as a technical level as any pivot point. It's more psychological, and it's going to make headlines and all that. On the bottom, we see where we dropped to below average with volume. We're still extreme positive with the Williams percent R, the CCI 14, and the CCI 20. We did show some improvement with our 20, 50, and we were pretty much flat with the 200-period moving average study. We came down just a little bit with the force index, but we're still positive, and we're still above an advancing midpoint. We're still extreme positive with the stochastics in the short, intermediate, and long term. We're still up in the +3 channel for the standard deviations chart. We came down just a little bit with the balance of power, but we're still above the midpoint. We're still positive with the go, no-go system with darker blue bars. We're still hugging the highest high line. That's the blue line here. That's positive. The TTM squeeze is the lighter shade of blue, which is positive. We're actually starting to turn down here a little bit with the ease of movement. So that's a little bit of a concern. We're continuing to go up with the Arun because the green line is pegged near the top. The red line is declining. The difference between the two is our oscillator. Since the green line is above the red line, that's why the oscillator is positive. And this is still one of the negative divergences that we've been watching, not only in the short term, because the S&P is setting all-time highs, and we have the McClellan oscillator being negative, but also longer term. As we've been going up with the S&P, we've been seeing a negative divergence with the McClellan oscillator. So we're still continuing to decline with the summation index based on price. We're pretty much flat right now based on volume. We're also seeing this negative divergence with the NYSE McClellan oscillator. The S&P has been going up. We're negative in the short term. We've also been declining in the more intermediate term. So when we look at the summation index for the NYSE, we're declining based on price and declining a little bit more based on volume. We're turning down just a little bit with the Swenlin trading oscillator. We're still above the midpoint here. We're pretty much on the midpoint when we look at volume. We're still looking extreme with the PMO. When we look at it by itself, we're still below the moving average based on volume, and we're turning down just based on price. We're turning down just slightly based on volume. Nothing extreme here. We ticked up a little bit with the PMOs that are rising, a bit of an improvement with the buy signals. We're coming down after being extreme with the PMOs that are above zero. We continue to be positive, and this bar is so small, you can barely see it. When we look at the Elder's Impulse system for the S&P, we're still positive with the parabolic SAR. We're still above the moving average with the slope oscillator, but we're above this green line, which often means we're getting extreme positive. We're also looking more positive with the MACD and not necessarily extreme. So in the short term, we're seeing some improvement here, but both the slope and the TSI are extreme. We're looking positive with the MACD, a little bit of an improvement with the PMO and PPO. We're still positive with our longer term oscillators, the TRIX and the KST, but they're looking rather extreme. We're still above all of the plotted moving averages in our moving average tree. We tick back up again a little bit with the bullish percent index. So to look at this in a negative way, we were extreme positive and we're coming down, okay? To look at this in a more negative positive way, we could say now we're starting to turn and go back up. So you can take a half glass. Okay, let me try that again. You can take this as a glass half full or half empty, depending on your personal preference. We're continuing to decline with the NYSE bullish percent index, but we're still above 50. We're turning back up and we're extreme positive with the NASDAQ 100 bullish percent index, still extreme with the money flow index. Tick down just a little bit, but we're still positive with the ultimate oscillator. Came down a little bit with the vortex, but the green line is still well on top. We're still extreme when we look at the 14 and the 9 period RSIs, and we're continuing to be extreme with on-balance volume. We're continuing to be positive when we look at on-balance volume. And we're watching this as well, the 200-day moving average study for those stocks that make up the S&P. It's coming down just a little bit where we advanced with the 50-period moving average study. We continue to be positive with the Copic curve. We're getting more extreme positive with the with the Sean trend meter. We're still extreme when we look at the boom indicator. This measures how far away are we from the 20-period moving average. We're still getting extreme with the 50-period moving average. We're continuing to show some improvement with the 200-day moving average. When we look at our trend, though, the Heiken Ashi continues to be positive. The Kegi chart is positive, pointing up. The Renko redrew in here a little bit, but it's still positive. And the 3-line break is also positive. We're still looking extreme positive with our 150 and 200 period moving average studies. And not an awful lot was really decided. I guess you could say the equal weight maybe outperformed slightly, but we have both of these lines right on top of each other. And our ratio was actually down just a little bit. So yeah, the equal weight did slightly outperform. We're still looking positive here with the Dow, and I think, yeah, it did set a new all-time high, but we're right underneath this R1 level, and we've hit this 3 times now. So this could be acting as overhead resistance. We still continue to be positive when we look at the Elder's Impulse system for the diamonds. We actually broke above this R level for the NASDAQ, so that's looking more positive. We're still in no man's land here when we look at the Fibonacci chart. And we're coming right up to this R1 level when we look at the NASDAQ 100. This could act as overhead resistance. We're still positive with the QQQs, with the Elder's Impulse system. We're, I think, showing some improvement here. The indicator just seems to be barely above the moving average when we look at the momentum for the NASDAQ 100. The small caps came right up to this pivot point. Now they had an up day. They were up 1.33%, but can they break above this pivot point? They're above their 50-day moving average. So that is positive. And they've switched back over to positive with the small caps when looking at the Elders Impulse system. We're coming right back up to this resistance level with the Russell 2000. We're looking a little better with the RSI going above 50. On a momentum basis, we continue to be negative. And we came right up to this R1 level with the mid caps as well. But we remain positive with the mid caps when looking at the Elders Impulse system. We did set another new all-time high with the FANG index, and the financial sector is continuing to hold up, at least for right now. And we saw a little bit more of a decline in New York Community Bank. We just want to keep an eye on this for now as we're waiting to see if any other banks are suddenly going to become known to us. The dollar is going up. We're getting more into the 104 range, but longer term, we're still in a downtrend. We were up with the 10-year based on yield. We were down with the 10-year based on price. And then looking at growth of value, we're right on the moving average with the Qs to S&P. We're showing some improvement with discretionary to S&P, but we're still underneath a declining moving average. Large cap growth is really improving when we compare it to large cap value. So with the large caps, the mid caps, and even more pronounced with the small caps, this is the third time I pointed this out and said it's more pronounced. That could be positive for the small caps. We're just not seeing any follow through with the index. We're still extreme with the 10-day average of the S&P 500 highs minus the lows, even though we are coming down. We're still above this green line. We're still positive with our broad market range of the 5-period moving average of the highs minus the lows. We're still going up with our S&P to utilities ratio, and we're still going down with our staples to S&P 500 ratio. Both of those charts, the previous one and this one, that would be positive for the S&P. So what's our outlook for Friday? We're positive. We are kind of having to deal with this overbought condition again, but at the same time, we just asked this question, is weakness developing? We can make a case for that, but we're not seeing any real follow through based on price. We're not seeing any selling as the market has been chopping more or less sideways. That will change at any time now. This isn't going to go on forever, but for right now, that's all we can use to evaluate things. We're not going to have any economic reports on Friday, so it may end up being another slow day. Now watch it just go crazy. And then the geopolitical events, you might be able to throw the Super Bowl in there for some reason, just because you have the biggest sporting event of the year. You have hundreds of thousands of people that'll be around the stadium. You'll have tens of thousands in the stadium. Let's just hope something really weird doesn't happen. And then we don't have any economic reports for Friday. Seasonally, we are neutral to positive with the Dow and S&P, where we're just flat out positive with the NASDAQ. So we have seasonality looking better. We're also looking better when we look at the orange line on this chart. That is looking positive. We're also looking fairly positive here with this other chart that we look at. We're still in this more positive time here with the Stock Traders Almanac statistics. We're also coming up into the first third or so part of the month with this seasonal chart, and that's also looking positive. But February tends to be the weakest month out of the six best months. Boy, that was a trip of the tongue there. Friday ends up being the second most positive day of the week, so we do have that going for us, at least how things played out in 2023. We do see some positive seasonality on the 7th trading day of the month during an election year for the S&P. So our scenarios, not going with the down one. Yeah, you could make a case for that, but we're just not seeing any follow through with price. If anything, we still go with the up scenario, but we are overbought. We do see some things that concern us right now, and it's probably a lot to do with that 5,000 level, but it's unsure if we're going to see some kind of a resolution of that in Friday's session. We may peak above it again. It's where we close is going to be the most important part. We're working more against this sideways situation because both of our ADX charts are above 20. The warning signs, the risk on posture, it's been chopping around kind of like the market has. We're a little bit concerned here. We're turning more positive with our oscillators, but they're also extreme positive. So I have this on both slides. We're still watching the shorter term and more intermediate term negative divergences between the McClellan oscillators and the summation indexes. The small caps and mid caps are still negatively diverging from the S&P. It's setting all-time highs, but the small and mid caps, they're not doing that. They're not really even breaking out, although we are seeing some improvement. I'm not showing these charts, but I'm looking at them every day where it's still showing us that the transports are negatively diverging from the Dow. We're possibly seeing some improvement with the momentum indicator that we use for the NASDAQ 100. The positive signs, we're still seeing growth improving. And to this point, that is encouraging. And then we are getting more positive with our oscillators, but we're also extreme positive. The equity put call ratio, even though it's hard to see, it is starting to come back down when we base it on 5 periods. The parabolic SAR and the vortex charts are positive. The bullish percent index is positive, but still extreme. The Copic curve is positive. Small and mid-cap growth is positive and now starting to improve. We're breaking out of the ranges that we've been in for quite some time. The financial sector is still positive as well. So when we take this together, we're positive and we're overbought, and we just keep asking this question: is weakness starting to develop? We could have a solid update on an increase in volume where all of our underlying indicators show some improvement and take this question off. Or we could have some real tentative moves, which kind of makes us still have to look at this question. In the short term, we're kind of asking that same thing, as well as the intermediate term. We are still positive in the long term, but we're becoming more overbought with our longer term moving averages. Thank you. I really hope you found this helpful. Have a really good day. Enjoy the Super Bowl if that's your thing. And I will talk to you over the weekend in the videos as I post them.